Um, yeah, I guess we can already start with some good news. First of all, welcome from my side. We're still letting people in, but I can, already share some good news here because Trang is already here. Um, you know, we are very happy to announce that Trang is going to join Tsunami as CEO Americas, and that is very, very, great for us because she has such a great experience in, building venture funds, and that is something that for us is really important. We want to not only, develop venture staking, what I'm going to present today, but we finally want to solve the funding issues for pretty much all ventures out there. And yeah, therefore, we are really happy, Trang, you're here. And yeah, maybe you want to briefly introduce yourself as well.
Yes, yes. Thank you so much, Chris. I'm very honored and very privileged to be part of this journey with the team at Tsunami and Christian. Just a little bit of background. I joined Tsunami from Transfer Platform. And Transfer Platform, I co-founded the firm in 2015 and had grown that to a 2.5 billion in AUM. Previously, I was a operators and founder entrepreneurs. I have found companies before and create institutional investor. I was also in banking as well. What's very excited about Tsunami? We actually invest in Tsunami in a transfer in 2023, just when the crypto down, actually end of 2022 and early 2023. And like Chris says, I really believe, or the entire transport team really believe in Tsunami is a way that we can decentralize the venture capital by replacing the traditional VC firms, with a community-driven model where everyone, right, every builders, developers, and entrepreneurs, from anywhere in the world, right, Africa or like place or understate market where you cannot get access to capital can build companies, and that's what I'm very excited about. So with Tsunami, what's really exciting about it's not just about venture staking, which Christian will talk about today, but it's about building a global, inclusive, and decentralized funding ecosystem. And I believe enough that Transfer has me join as like Christian said, as the CEO of America. So I'm very excited about the next step of this journey.
Wonderful. Thanks a lot, Trang. And we are very, very happy to have you and welcome to our team. I just heard that also two or three others had issues. So I'm actually sending out some invites to these people directly. Oh my God.
You can let us know, Chris. We can do
Yeah,
it.
yeah. It's maybe I'll send you the list of people that I invited
Just
as well. I don't know if it's them, but
just send them the Zoom link. But they'll have to register on Zoom also. So
yeah, yeah, everybody has to register. That's fine. But the Zoom link didn't change, so
no, no, the Zoom's link is same. I'm sharing it here in chat. Um, and this can go.
okay, I just forward you the.
Maybe in the future we just send like own ISVP like the Zoom link, so they can just click on that. Yeah.
Wonderful. Yeah, I sent
Yeah.
you the ones that I invited. Maybe you just can reconnect the link. Okay, wonderful. Then yeah, we are ready to start here. I will briefly share the presentation. And I hope everybody now can see my screen. So today I'm going to present to you venture staking. Venture staking is a new form of investment where you, on one hand, can invest into a flourishing ecosystem like the Ethereum ecosystem with buying Ethereum, and at the same time, while retaining your principal, you can invest the yields into Tsunami Ventures, and these ventures will therefore give you a higher yield than you usually would get in staking Ethereum in the native way. How this is going to work, I will present to you now. The mission of Tsunami is we want to become the leading decentralized ecosystem for early stage venture building. What do we mean by that? We see that venture building has become a global phenomenon. Builders from all over the world are, not only working or cooperating with founders from next door, but with founders from, other countries, even other continents. And they often decide to partner with someone, they believe is a great fit also as an advisor, for example, who might sit at Stanford University or in China somewhere. And therefore, we believe this topic of venture building is more and more remote topic and is more a global topic than before. And we also see that, the new technologies that are available, Web3 and AI especially, are very, very helpful in building ventures on a global scale. The characteristics of the blockchain, for example, being borderless, is something very, very helpful in developing these ventures. We also see the transparency and the automation as something that helps a lot. And if you combine that with AI, we believe there's a really big potential for founders to use technologies like AI agents that are combined with Web3 power to develop their venture quicker than before. And that's exactly the market we are in. We've been developing our platform already for more than 3 years now. And we have been working with more than 8,000 founders to develop the offering further. So there are obviously two different target groups at the moment we are facing or we're looking at. One is the sort of investor who is new to Web3 in general, and this part of the presentation is probably more for them. And one is the investor that is already very knowledgeable in that space. And for both, we believe venture staking is a great opportunity to develop their portfolio. So for the ones not being in crypto invested yet, I think it's a very, very interesting time. Not only because Trump took over the presidency in the United States, but also because, in the United States, if you look at the Congress and Senate sentiment, which of the senators are actually pro-crypto or anti-crypto, the sentiment has never been better in these two houses than it is today. If you look at the ETF inflow in the market, 8 billion in December last year alone. I think this month in January, it's been a little lower, but also above 5 billion. B2B adoption is on the rise. It's very interesting. I think in B2C, we're still struggling here and there, but in B2B, it's really picking up speed, especially for DeFi technologies. And if you look at Bitcoin versus gold, in terms of valuation, I think Bitcoin is roughly at 2 trillion, gold at 18. There is still some space to go if you believe that these two at some point might maybe not level out, but get closer, because the obvious advantages of Bitcoin in comparison to gold are quite clear. For example, transferring Bitcoin is a lot easier than gold these days, at least the physical one. What we also believe is interesting, if you look at the central bank digital currencies, pretty much all major countries are developing their own programs and at least have a pilot or a proof of concept in place. as you know, the US is now switching to become a more and more positive crypto country. You know, we believe that, you know, the Western markets, which have struggled so far a little bit in terms, you know, if you compare it to China and Russia, for example, will also offer a digital currency, you know, a CBDC, so a central bank digital currency. And if you just imagine what that implies, then we believe a lot of the, you know, adoption that hasn't been there yet will in the end, you know, sort of enter the market, because if the central banks actually enter that market and they're more stable coins, you know, then we believe the overall adoption of the crypto market will definitely increase. So we have now discussed that it's in general interesting to invest into this market. It's a great time, you know, I mean, there has been an uptick after Trump's election, but it's also come down a little bit. So the timing, in my opinion, is really, really good. Now is the question, you know, in what ecosystem do you want to invest in crypto? And there are a couple of bigger ones. Obviously, Bitcoin itself, which stands for roughly half of the total market cap, is one option, but that does mean that there's no real further, you know, work possible with the capital, because Bitcoin is just a store of value, and it's very difficult to generate low risk yield on Bitcoin. So we have to look into other ecosystems. And for, you know, when you look at other ecosystem, I think it's always interesting to look at the number of developers that are actually working in these ecosystems and what's the trend for developers overall. And from this graphic, I think it's interesting to see that, you know, there is definitely a low on new coming developers into the market, which is at the moment actually picking up again. But the established developers, and that's to me the interesting information from this graph here, are not going down. So everybody who has entered the market actually stays there, which is a good news, because these people really believe in the market and keep on believing in this market. So if we now look into the you know, the stacks or the technology stacks which are possible. Obviously, there are two big stacks at the moment. It's the Ethereum stack and the Solana stack. And we have decided to go with the Ethereum stack, although the Solana stack has some momentum at the moment. But we've analyzed, you know, Solana in the last couple of months, and this momentum from Solana came mostly through meme coins. You know, it's been a big trend. I think everybody knows what meme coins are and you know where they come from. Even Trump issued a meme coin. We, you know, we don't want to condemn meme coins. That's not the point here. We just believe there should be more value, you know, propositions and cases and categories than just this, you know. And if you look at the meme coin index from the highs, it has come down more than 40% in the last 4 weeks. So we hope a little bit, you know, that this hype that has been there is also over. I mean, Pump.Fun on Solana was one of these services that really, you know, developed this hype. But as other hypes in the industry have come and gone, we believe that this hype, to the extent that we've seen it before, is over. And so maybe also the Solana hype might be a little over. We still go with Ethereum because there are roughly 5-to-1 developers in that market. So there are a lot more developers active in the Ethereum stack, meaning you can add EVM and Ethereum here. Ethereum EVM stands for Ethereum Virtual Machine, and then compared to Solana and the SVM stack. So there is 5 times more innovation being built in the Ethereum stack at the moment, and therefore we consider this as a very good and it's not riskless, but it's a lower risk investment if you look at you know, other possible investments in this market. The big issue that we see with, you know, blockchain in general, and that is something for maybe the ones that haven't been investing into blockchain or crypto markets so far, is this? It means that usually a lot of people that just entered the market, question after only a short time period, where's my Lambo, meaning where's my Lamborghini? And that's a little bit the issue. I don't think the technology has any problems here, but I believe that the humans that are using the technology are often very greedy. And therefore, we've seen a lot of the trends we've seen before. And what we want to bring to the market is, less of this and more of a purpose, which doesn't mean that the yields that are being generated are lower, but just longer lasting. The idea is really to support projects which, do not end in a couple of months like a meme coin, because there's no real purpose behind a meme coin, as the name already says. But if we invest in longer lasting projects, we believe that we will also be able to achieve longer lasting yields and success. So what is our go-to-market interaction? We said we want to become the leading ecosystem for builders. You can imagine it's a mixture like LinkedIn, or a combination of LinkedIn and Carta, meaning LinkedIn connects all the entrepreneurs out there, and there are 500 million entrepreneurs in the world. And a Carta, meaning a cap table solution, because in the beginning of a venture, it is important who owns what. That's sort of the first question that a lot of founders ask themselves, and how do I manage this? And that is what we built with our technical platform Foundance. And to solve the chicken and egg problem for a platform or of a platform, we organize every 3 months a so-called Ventureton, which is a 10-day hackathon, remote. Everybody can join there and apply to join. We let the best people in. And now, at the moment, we have a Ventureton running. 350 people joined that Ventureton. We have more than 80 submissions for this project or for this cohort. And we are at the moment selecting the best, roughly 20 of these, to present and stay in the cohort until, in 10 weeks, we get them funded with roughly 125K for 6%. That's the usual deal we're suggesting. This way, we've already onboarded more than 8,000 platform users, and roughly almost 100 DAOs started, because what we're suggesting for these for the projects is that they start in a digital way, the most digital way possible, and that is in the beginning with a DAO. And we have done and committed 15 investments so far. And this cohort is adding to this. We're already opening up the applications for the next cohort starting in April. Think if you look at the unit economics, it's very interesting. We pay roughly 15 to 20 USD per user joining the cohort. We facilitate an investment, or we, get shares in the ventures for every venture that is joining our cohort. So that's roughly 1 out of 30 ventures that are joining the Ventureton. And the initial value of the investment is 40K. If we apply a very normal average return per investment of 5x after 4 or 5 years, the multiple for us overall is more than 100, which we consider as very good unit economics, because we source the deals, the founders come to our platform, they come join our cohort, therefore we already get shares, and then we invest at the moment 20K at most favored nation terms, if a third-party investor is also investing. So that has been so far quite successful. We have been investing in, for example, a venture called Rethink Finance, which is at the moment funding at a 30 million valuation. Audit One, which has already done investment round with another investor at more than a 10 million valuation. And there are, other deals, for example, Dealflow, which have gone through Techstars as well. So we've shown that it's possible with this model to find great founders and get them funded. Our revenue model is we usually look for a share on cohort participation plus whatever we get on the investment side. So we commit a 20K investment if they present on our demo day for investors of 20K. We usually try to get another 100K to the table, and like that we come to a 3% plus in a share for our cohort projects. Long term, we want to become and focus more on the platform itself and maybe reduce the share that we take from the founders. But for now, that is our business model, and I think it works quite well so far. The roadmap of the whole ecosystem is, we've done the launch in last year. We have done a funding round in last December. We added crowdfunding functionalities, and now we're looking at a token launch in Q2 this year, and we will, have more than 60 investments on portfolio by the end of the year. That is the goal. Now I want to briefly talk about the launch of our token. It's going to be a fair launch model. What does that mean? The fair launch means that it's not the usual type of token launch like it's been before, that we have, certain shareholders, and these shareholders get, I don't know, a certain amount of tokens, and then we go to the market and mint more tokens like with an IPO. That model has proven to be difficult, as a lot of the shareholders which held their token that were all of a sudden liquid sold their token on the market, and the new investors got dumped on and therefore lost all their money. And that is what we want to avoid. We therefore looked at a model that is also used by other partners. The best sort of prototype for this is called Morpheus. You can look at it on the website more.org. And it's also a fair launch model supported by staked Ethereum. What does that mean, fair launch? It means there are no tokens pre-minted before we go to the market. So when we enter the market with our own liquidity pool and the token is tradable, at that point in time, there's no ownership of that token and there's no supply for that token. So there's only the demand and there's the liquidity pool. And then we mint 800,000 tokens per month or 200,000 tokens per week. And these tokens go to all sort of groups of supporters, the builders, developers, liquidity providers, and the existing shareholders that support the ecosystem. That is the basic idea of a fair launch. It means that you remunerate the people contributing to the network and the money and the compute, for example, in a fair share over time. And we have identified the builders for us to be, our most important customer group. It is the people that actually start the ventures, that use our platform, and that in the end develop the ecosystem. The developers are the ones that are producing the code and are, developing the software behind it. It's also part of the team. At the moment, in a usual decentralized version, this would be only code that you're remunerating. We believe that a lot of these decentralized projects, it's I wouldn't say a lie, but obviously every decentralized project starts from a centralized point. And if you too early consider yourself decentralized, it is still a lie. And we believe that the market is suffering under this sort of decentralization pressure because you only remunerate code, but you do not remunerate UX, marketing, sales. And Therefore, we believe, especially in the beginning, this is still necessary for an early project. So our decentralization focus will be around 2030. We believe we need some more time to develop this whole ecosystem, also with the usual categories of people that you have in a normal company, and not only with developers. I personally believe that the whole market is suffering a little bit under this focus of only focusing on code, because usability is suffering or has suffered a lot, and a lot of people are still anxious of using certain technologies in that market because it's just not well explained and only for developers. So we want to do that a little differently. The existing shareholders receive 23% of the newly minted tokens. They have so far invested 4 million into this ecosystem, and under higher risk assumptions, obviously, as early supporters. So we believe that this is a fair share, and the advantage of the remuneration of existing shareholders in that way is that they cannot dump all their tokens at point one when they when the liquidity of the token is given, after the token generation event, but they only receive their tokens over time, and they actually receive also 50% of their token directly as accessible and 50% with a 2-year lockup. Then we have obviously 6% go to treasury, meaning we need to provide liquidity for the pool. We need to provide for payments and have like our central bank some token for payments that are just have to be done. And we also have our own staking program, which is a little different to the Ethereum staking that I will introduce you right now. That is by sort of if we mint the token to our supporters, we want to incentivize these people to not directly sell their tokens on the market. And if they stake their tokens with us, meaning they promise to not to sell their tokens immediately, they will get additional 4% in staking rewards every week, pretty much. And the interest rate that comes with this depends on the amount of staked tokens and the price of the token on the market. I will explain that later for the staked Ethereum as well. The second part of this is, just that everybody understands. So we're minting the tokens to these 4 groups of people, pretty much, builders, developers, liquidity providers, and existing shareholders. And these token holders can now go to Uniswap and sell their tokens if they need cash or if they want to exit the ecosystem. The liquidity providers provide liquidity in Ethereum, and that's a little bit a different model, and that I will come to right now. But the usual goal is really that the developers and builders and existing shareholders, they receive their tokens. We hope that a certain percentage of these are being staked with the staking rewards that we give them, and then they can go to Uniswap and sell their tokens. For the liquidity providers, this is now a little bit different. For liquidity providers, or the new investors, as we call them, they provide Ethereum to one of our ventures vaults, or we call it on-chain investment vehicles. Rethink Finance is producing these on-chain investment vehicles. It is our biggest venture at the moment. And what have they been producing? They have been producing a software that actually protects your assets, but still can give certain permissions to fund managers. It's like a fund management solution where you can tell a fund manager, we believe in you, we believe in your way, how you stake assets or how you trade Ethereum or other currencies. But if you tell us that you're trading, for example, in Bitcoin and Ethereum, we allow you only to trade in these 2 currencies. And you can come up with a lot of different solutions like that, or permissions. It could be we only allow you to stake native Ethereum. That's what we're doing. Or we only allow you to trade in the Solana ecosystem. Or we only allow you to trade with meme coins if that is something that you can do. What does that mean? The big advantage of this, that the investor cannot run with your money. In the end, everything we build in the blockchain should be trustless, meaning we don't need to trust the other party. In a managed fund environment, that is obviously difficult because in the end, you're giving your funds to somebody else to take care of it. And we have built a solution, that the trust that you need into this person can be actually zero, because they can only invest in what they have said before and cannot, for example, launch a new coin and then a coin they have just launched, and buy all this and run with the money. That is not possible under with this environment. And that's why we think it is so sort of the risk is reduced when you're working with Rethink Finance, where we stake our ETH. We take that ETH and buy the token that is being minted from Tsunami on the market. And that is where the demand comes from for our token on the market. And we believe that every additional or every future token launch will actually need some support like this, where a regularly generated yield is used to increase the demand for the token on the market. A lot of token launches have been suffering because they didn't see enough demand for their token on the market. If there is, like with Morpheus, a 50 or 100 million in ETH backing that token launch, the trust in this token is obviously a lot higher, because people see, okay, a lot of investors have already been putting money into this, and the yield is being used to supply, to increase the demand for the token. I have explained this a couple of times. If you want to, and I understand that a lot of people who haven't been really deep, sort of working in this market might find this difficult to understand. Obviously, we can have, questions afterwards, but I think this is sort of the basic understanding of how venture staking works. You dedicate Ethereum to a certain project and say, we want to invest the yields that we generate. Usually it's 3% native staking yield, 3 to 4% invested into token, but you receive the token of the network, and therefore the yield is multiplied, and it actually goes to 10, 20, 30%. So this multiplication effect comes from the fact that not everybody who we issue the token to is directly selling the token. So there is a multiple. And as I cannot exactly tell you what the exact percentage of yield is going to be for venture staking, because it depends on two variables. One variable is how many staked ETH will we have supporting the ecosystem? That is, the first variable. We have already more than 2,000 ETH committed, so it's we're roughly in the first column here. So that means 10 million in ETH, so 10 million USD in ETH, 20 million, 30 million, 40 million. I think Morpheus is roughly at a 70 to 100 million, depending a little bit on the day. And here you can see the share price. Obviously, as we're minting new tokens every week to the investors, the exact yield depends also on the share price. Meaning the more ETH is staked, obviously the less tokens will be given to each of the individual investors. And the higher the share price, the higher the yield. So we believe that the yield overall will be somewhere in that green circle, depending on the share price and the amount staked. if there are any questions, please let me know. I think you can raise your hand if you have any questions. We can also obviously take all the questions if there are any after the presentation. Every week there will be 200,000 tokens minted over a period of 7 years. After 7 years, we will reduce the number of tokens minted by roughly 0.7% per week. And therefore, we will end up at roughly 100 million tokens after 40 years. So to summarize what we've been saying, we believe it is very advantageous for investors to stake ETH, because in the end, you can at any time take back your principal ETH. We do not touch it. We only generate a yield with it, and only that yield is used for the investment into the Tsunami ecosystem. So the yield is used to buy the Tsunami token on Uniswap, that's a decentralized exchange. And the newly minted token to the wallet of the investor generates yield 5 to 30%, as we've just seen. So we believe it's a good combination of holding Ethereum, so therefore being exposed to the crypto ecosystem and to one of the best currencies we have in that ecosystem, actually the second biggest there is, and benefiting from the price increases that we can see on Ethereum. So that's what you do first. And on top, investing in the innovation of that market overall. So therefore, we believe it's the best thing to do these days. It's a lot better than investing directly into a venture, because everybody of us knows that there have been a lot of losses in direct investments. The worst thing that can happen for you is that you're using the yield, but you will retain your Ethereum in any case, and can therefore exit the venture staking also at any time. It's a 2 weeks unstaking period, meaning that if you decide to unstake, we have to get the Ethereum back from the staking nodes and send them to your wallet, but there's no price risk or anything during that time. So yeah, thank you a lot for now for taking the time and looking at this presentation. If there are any questions, please let me know. We now have roughly 15-20 minutes for a discussion. If there are any questions, I'm happy to answer them here. Jens is also here, who is one of the first investors into the venture staking. So he might also explain a little bit his reasons why he believes in venture staking overall. And we obviously not only want to support the Tsunami ecosystem. In the near future, we will also support other ventures which are started on our platform. And therefore, the innovation will never stop. Thank you very much. Let's build something together. And I'm happy to discuss questions or get more feedback.
Christian, I had a question. Just this is new to me. At a high level, could you maybe just talk about each stakeholder? So in other words, if one is to invest in the platform, what kind of dollar amount investment would be typical, and then what is the timeliness of the distributions? Is it like a monthly or quarterly, and the lockup period?
Yes, that's a very good question. So the first topic is we need to have at least 100K USD investments, because we need professional investors to look at this. We don't have a prospectus or anything. It's obviously a Swiss-based entity that is issuing the tokens, and therefore the lawyers said we need the 100K USD. You're investing into a Rethink Finance vault, which is a contractual agreement. The unstaking period is 14 days. So it's pretty much anytime you want to unstake your Ethereum, you can get it back. And the interest is being paid out theoretically weekly, but if you want to, you get a token, a so-called claim token, with which you can claim your interest. So you can claim your interest theoretically weekly, or you can accrue the interest and claim it once a year or when you unstake. So there is more opportunities to, decide what is best for you, also for the tax situation.
What is is the risk the price fluctuation of Ethereum, or how do you view that?
The risk is, yes, the price fluctuation of Ethereum. That's one risk involved. And obviously, there's the risk of the yield sort of being also fluctuating depending on the token price of the Tsunami token. Yeah, those are the two risks involved. I guess, Ethereum will also, will in the future exist. It's hard to predict exactly the token price. We are obviously very bullish in general for the whole ecosystem, and we're also bullish for the Ethereum ecosystem. But yeah, for the ventures, there's obviously a higher risk involved, but also, a higher return potential. So the yield on top comes from the development of the ventures that you're actually staking for.
Thank you.
Let me answer to one thing. Sorry, August. Yeah, it's maybe right a second, because I want to answer the risk situation. I don't know if the price change on Ethereum is really a risk. Yeah, because if you are already in Ether, yeah, so you would hold Ether. Yeah, so and at the end, then there is no risk. Yeah, because you put your Ether into a smart contract, yeah, and you can get it back anytime with a 2 weeks lockup period. So if you are denominated in USDC normally and in US dollar, so and you would transfer US dollar into Ether, yes, then there is a risk in price change. Yeah. But for most crypto natives that are denominated in Ether already, yeah, so there is at the end no risk at that point. The only risk is if you would stake by your own, yeah, then you would receive directly the rewards, the staking rewards. And in the venture staking model that Tsunami is providing, you won't get directly the staking rewards. You will get, instead of this, other claim tokens that will represent the participation in the Tsunami ecosystem. So, and if that is worth nothing, yeah, then you wouldn't have participated into the rewards from the staking. But the staked Ether, the principle itself, it's untouched. So if you are already denominated in Ether, so and the Ether are not staked, then there is at the end almost zero loss for sure. Something can happen if the protocol goes bankrupt or whatever. Yeah. So, but that's a general risk in the whole ecosystem.
Guys, I want to add something here because maybe it's for Fred also important. From my point of view and my experience, any of those staking supported ecosystems live off something being staked. Now, if nobody's going to stake, then there's no money to support the ventures. So then those tokens are going to do well. Those tokens or these projects over time hopefully start getting its own life because they're actually good projects. They're growing, they're going to do something that has utility. There's a community then growing attached to it, and so on and so on, which that's obviously then going to create a big yield kicker. But it's the crucial aspect of the whole thing is that there's enough people staking and actually staking for a time. The risk here is the volatility of staking, meaning like short-term staking. People stake, take it out, take it in, take it out. Like this isn't, you can then less predict how much support which project's going to receive, right? But generally, I think that's in a nutshell, that's the main aspect of it. But it always comes down to projects with any venture capital startup. Like if you find good projects and good companies, and those actually a good company building something meaningful, over time they become alive on their own, and they're going to start listing their tokens elsewhere, and then there's more liquidity adding to their token, etc. And it's not depending anymore on that specific either staked situation. That's my experience. But one thing I wanted to ask Jens and Christian, the ETH staked via Rethink, it's because it's then audited, and also are you going to do then the staking as Rethink? And I assume is non-custodial staking, or, well, I mean, how does that work? Just so we understand the flow of.
Yes, Rethink are non-custodial vaults, and the staking is actually done by our partner from W3. So they have a service that offers staking nodes, and they can every 32 ETH they have a new virtual node, and that is already being audited or is already audited and live, and we can now take funds. Actually, if you go to Tsunami.io, there is a link called Venture Staking on top, where you can already go through that full cycle of investing into a Rethink Finance Fund. Why do we do it with Rethink? Because we have flexibility. We will offer additional funds there, not only native staking funds, but also funds that are trading, meaning that could theoretically trade in meme coins, take your assets, have a professional manager manage your assets, generate more than the 3%, meaning you generate 10, 15, 20, 30%. I mean, these numbers are not uncommon in the market, and take this to invest into the token and then have another multiplier with the token. I mean, that obviously is even more interesting. The problem with this is sometimes if you want to generate 25, 30% risk, obviously your principal is also at risk. And that's what we wanted to avoid for our first fund. So the lowest risk fund for venture staking is the one where you generate native staking yield. Therefore, the staking yield is low at 3.5%. We take that yield to invest into the market. Next funds will go with different strategies, and that's what we use Rethink for.
But one idea to throw in would be that Rethink starts also offering multiple crypto staking channels, meaning because like for somebody who's not knowledgeable, doesn't have naturally ETH in their wallets because they just don't even have a wallet, they want to get involved now, they're going to have to buy ETH, but maybe their mates told them they should be owning something else. And now they're owning that and I want to be long that because for whatever reason, they should, in a way, maybe also have the opportunity to stake that. And often you will get probably more yield on those alternative staking currencies that you can then maybe even create more yield. It's just ideas for going forward, not right now. But as this grows maybe and so on, maybe there's more participants coming that have different currencies in their wallets and, they want to optimize their wallet strategy and, they can see that as a way of doing that. So it's just an idea.
Definitely good points, and we will add more funds. I mean, I think there are already 10 funds deployed on Rethink, so it's growing very quickly. It's a very interesting protocol. There are now 1.5 million TVL or assets on the protocol. This will probably be 10x in 2 months from now. So we will see, and that's also a good thing. We will be able to compare the different strategies in these vaults. But you're right, offering different staking mechanisms in different currencies would definitely be an option. I think the team is pretty small at the moment, so we will probably go with partners for this. In the end, you just need a manager to, connect the fund, audit the protocol, and then that's it, So it's very easy on the side of Rethink. It's just the permissions, yeah. But I mean, I think we have to watch here. I don't know who is now a very sort of crypto native investor and who are the ones who are, looking to enter the market. I think, August, you also wanted to have a question. I know.
Yes, my question is twofold. Number one, if we let the interest accrue over the year, does the interest bear interest over the year?
The interest itself would be staked, I guess, Jens. Is that right? Yes.
And with how much interest?
It will depend on the number of investors. It's unfortunately not really predictable. We are minting 4% of our new tokens to the people who are actually staking their coins, meaning not selling directly. But it depends obviously on the number of people who do that.
Do you have an average number which you think one should?
Well, we believe that the staking rewards, I think we have made a calculation which I can share afterwards, will be between 10 and 30%.
Good. The other question is, do you have a mechanism or an administration who provides us at the end of the year with kind of audit-proof record of all the transactions? I'll tell you why, because I'm invested in Joint Capital. We had an institution in Berlin which was a complete disaster, and my tax office turned everything upside down to look into things which were produced faulty. So if we do transactions like this, which is multi-steps over the year into artificial currencies in and out and whatever, we need a solid record which the tax office can really follow up and then audit.
Yes, that shouldn't be a
Who's
problem.
the auditor you work with?
At the moment, this is not, I mean, it's audited on a technical side, but it's not audited from a tax side yet. Yeah, but we can definitely do that.
Well,
Just
what we need,
to throw in, August, there's a way of doing this.
Sorry, can I finish? Thank you. What we need is a solid write-up, which our auditors do understand, so that we can put it forward with our tax review. That's it. I don't need an audited account from you if I audit. I just need something what my auditors do understand. It's Mazar, and they work for me worldwide, so that they can then prepare it and put it in the whole package.
But that is not a problem at all. We can provide that because all the data is on chain, and there are a lot of vendors who
we need
for such an audit. So that will be provided definitely.
Good.
August, we work with Dentons, and we invest in that space actively, and there's softwares, not complicated ones, that consolidate all the wallets, and then one get a profit loss, and I'm sure Tsunami can do that.
Well, this is for me. It's only the question. We had this running disaster now for 2 years here in Berlin, which is a complete nightmare, and all the guys I brought into the investment were totally pissed off because the guys didn't do their work. It's Ace. It's this strange guy here over there, and now being reorganized. But we had for 2 years, we had a complete disaster. Tax office forced them back and took a quarter of my secretary's time, my PA's time to sort that shit out. And I don't need this again. I'm not getting younger, and I want to have the benefit and not the work anymore. Right, Chris?
Sorry to hear that, but yeah, definitely we will provide proper reporting on this. That shouldn't be a problem.
Let me add one organizational, maybe also technical point, that we strictly divide the principal from the yield. So that's why it's also an important point, because that's only possible why we are working together with Rethink Finance and the W3, because they are able or they have structured the contracts, the staking contracts like this, that the principal money that will send to the staking contract is different from will be different from the address where the rewards are going to. So we have two different OIVs. We have one principal or one OIV, the fund, let me say the fund, yeah, where the principal money is in, and another one where the yields are in. And you will get what principal tokens, yeah, that you can redeem your principal money, and you will get yield claim tokens. We call that yield claim tokens that will represent all the yields that are generated. And then it's on you when you want to claim the yield. Yeah, so you can structure this depending on what you are as an investor. Are you a private investor and maybe you are tax-free depending on the location where you're located, or are you an institutional investor and you have to pay tax for earnings, also if for price increase of tokens, yeah. But if you don't have to tax price increase, then you can leave the yields for longer than a year, yeah. Then maybe you will benefit in the price increase, and you don't have to pay tax. If you're an institutional investor, you can make it different, yeah. So we structured it like this, that the different types of investors are flexible to act according to the tax requirements of the different countries, of the two different tax authorities.
We also have a tax audit and some analysis of our tax lawyers from Switzerland. So if anybody wants to have that information, I'm happy to share that. It's also linked in the white paper. Great. It's already 4 p.m. So yeah, thanks for joining our call today. We will, follow up with more information. The Tsunami venture staking will be live from tomorrow on. And yeah, we hope to get you on board and generate a lot of yield.
Are you sending the slides around?
Yes, I will.
Thank you. I'm a bit slow taking up, so my age has to read it twice.
Wonderful. Thank you very much. Thanks for joining. Have a great day. Bye-bye.
Thanks for the good messages.
Thank
Bye-bye.
you.
Thank you. Bye.
Bye.
Cheers, guys.
Bye.